We've got a big election coming up, so I want to break down the tax policy differences between Trump and Harris. In today's video, I'm going to hit 4 different policies that are distinguishing between the candidates. Now, I'm a tax lawyer, so I can geek out on this stuff, but as you see in these policies, there are winners and losers. I'm not here to tell you how to vote. I'm just here to report as the tax lawyer. You decide. Now, the first one I love, this is from Donald Trump. He has came out and said, we are no longer going to tax Social Security benefits. Now, a lot of you might be like, wait a second, when I get Social Security benefits when I'm 65, I'd have to pay taxes on that? Yeah, that's how it works right now. I know it's freaking insane. They took money out of your paycheck and taxed you to put money in Social Security. The government did a terrible job investing it, and then the little bit of pennies they give you later on, they tax you on the way back out. Now, Trump's policy is, we're no longer taxing Social Security benefits, period. I love that policy. It makes sense. It's good for low income, middle income, high income. It just makes sense. Now, here's one from Harris that I love. This is for first-time homebuyers. There is a $10,000 federal tax credit and up to $25,000 in down payment assistance for purchasing a first-time home. So she's really focused on people who've never owned a home before. You had to have rented for 2 years before qualifying for this tax credit and down payment assistance. But she's really trying to target the home affordability issue through down payment assistance programs and federal tax credits back to those people buying their first home. Now, the next one is a really big one. This is the Tax Cuts and Jobs Act. This was passed when Trump was last in office as president, and he said he's going to extend these tax cuts. They are currently set to expire at the end of 2025. Now, let me go through the list here because it's pretty lengthy. First, individual tax rates. Back in 2016, these all went down. The top rate went from 39 to 37. No matter what bracket you were in, your tax rate went down. Those are all set to go back up. The second one, qualified business income known as QBI. This is a deduction that small business owners get on 20% of their income. So for example, if you're a small business owner that had $1 million in revenue, you get an automatic 20% deduction, $200,000, so that you're only taxed on as if you made $800,000. That was a huge benefit to small business owners in the tax legislation. Big businesses, C corporations, got a 21% permanent tax rate. Small business owners got QBI, but it was set to expire in 10 years, so that is coming up. The next big piece in there is the capital gains rate was reduced to 20%. Trump has said he would extend that 20% maximum long-term capital gains rate. This is the tax you pay when you sell stock, crypto, real estate, doesn't matter what it is. When you sell an asset you've held for over a year, you pay a max 20% capital gains rate. Now, Harris has said she will do a max capital gains rate of 28%, which is actually lower than what Biden had been proposing, but Trump has said he's going to go to the 20% current Tax Cuts and Jobs Act rate. The one thing I'll just add from Harris is said she will not raise taxes on anyone making under $400,000 a year. There's not a lot of specifics we have from Harris to compare on the Tax Cuts and Jobs Act. The only thing we know is she has set a max capital gains rate of 28% and that she won't raise individual tax rates on those making less than $400,000 a year. Now, the last one I like from Harris is the $50,000 startup deduction. Right now, under current tax law, when you start a new business, you are limited to $5,000 in your first year of deductions. Now, Harris has said she's going to increase that to up to $50,000 that you can take as a deduction in year 1. Now, what happens to small business owners is, let's say you start a new business and it costs you $30,000 in expenses to get that business started. Under current tax law, right now you can only take a $5,000 deduction on your tax return. The other $25,000 in expenses, you have to amortize and take over time. It doesn't benefit you as much in the first year. Harrison says she's going to bump that up to a $50,000 first year startup deduction as long as you spent that $50K in the business. Now, these two candidates have such differing opinions in so many areas, but I wanted to illustrate these 4 tax policies that I thought were super interesting and might be of benefit to you. But no matter who's in the White House, it's up to you more than anyone to take control of your financial future. So please subscribe to my channel. I'm giving you strategies on how to save taxes and build wealth. But I also want to know your thoughts on this, so please comment below. I'm Sorensen. We'll see you next time.